When an institutional investor considers buying a corporate bond, the first document they read is the prospectus. It is the legal document that describes everything about the bond, its structure, its risks, its legal protections, and the financial health of the issuer. Most retail investors never read a prospectus. Institutional investors read them as a matter of routine. And if you want to work in institutional fixed income, understanding how to extract the key information from a prospectus is one of the most practical skills you can develop. In this video, I am going to walk you through the key sections of a bond prospectus and what institutional analysts are actually looking for in each one. The first section covers the basic terms of the bond. This is where you find the issuer, the amount being raised, the coupon rate, the maturity date, the currency, and the denomination. But the most important item in this section, and one that many less experienced analysts overlook, is the seniority of the bond. Is this bond senior secured, meaning it has a claim on specific assets if the issuer defaults? Is it senior unsecured, ranking equally with other senior creditors but without specific collateral? Or is it subordinated, ranking behind senior creditors in a bankruptcy? Seniority determines how much you would recover if the issuer defaults. A senior secured bondholder might recover 60 to 80%. A subordinated bondholder might recover almost nothing. Same issuer, same default event, very different outcomes. The second section that institutional analysts focus on carefully is the covenant package. Covenants are contractual promises the issuer makes to protect bondholders. Affirmative covenants require the issuer to do certain things, such as providing regular financial reporting. Negative covenants restrict the issuer from doing certain things, such as taking on additional debt beyond a specified limit or paying large dividends if certain financial ratios are breached. Strong covenants give bondholders early warning and intervention rights if the issuer's financial position deteriorates. Weak covenants, sometimes called covenant-light structures, provide much less protection. Understanding the covenant package is essential for assessing the true risk of a bond beyond just the headline, yield, and rating. Two bonds with the same rating can have very different covenant packages, and that difference can significantly affect the outcome for investors in a stress scenario. The third critical section covers events of default and redemption provisions. Events of default specify exactly what circumstances would force the issuer to repay the bond immediately, including missed coupon payments, covenant breaches, and cross-default provisions that trigger if the issuer defaults on other debt. Redemption provisions tell you whether the issuer has the right to call the bond before maturity, under what conditions, and at what price. As we covered in our video on convexity, callable bonds have negative convexity in certain rate environments. The prospectus tells you exactly when and how that call option can be exercised, which directly affects the bond's price behavior and its attractiveness relative to non-callable alternatives. The fourth section institutional analysts study carefully is the risk factors section. This is often the longest part of the prospectus because issuers, advised by their lawyers, list every conceivable risk, however remote. Experienced analysts learn to distinguish between standard boilerplate risk factors that apply to almost any issuer and specific, genuinely material risks that are unique to this particular bond or issuer. These specific risks are where you need to focus your attention because they tell you something important about the credit story that the headline rating may not fully capture. Finally, the financial information section provides the foundation for the fundamental credit analysis we covered in a previous video. 3 years of audited financial statements, a description of the business and its competitive position, and for corporate issuers, key metrics such as leverage, interest coverage, and free cash flow generation. For sovereign bond prospectuses, this section is replaced by macroeconomic data, GDP growth, fiscal balance, debt to GDP ratio, and foreign exchange reserves, the same metrics we covered in our video on government bond analysis. Reading a prospectus is a skill that develops with practice. The first time you read one, the legal language and the sheer volume of information can feel overwhelming. But with experience, you learn to navigate directly to the sections that matter most for a specific credit situation: seniority and covenants for credit risk, redemption provisions for convexity and call risk factors for issuer-specific concerns, and financial information for fundamental analysis. If you want to go deeper into how institutional investors analyze bonds, evaluate credit spreads, and make investment decisions in real portfolios, subscribe to this channel. We publish weekly videos on fixed income and institutional investing, and if you want a structured learning path, check the link in the description.